Welcome to TalkTickers. You're here for the sharp insights from today's key earnings calls.
That's right.
And today, we are diving into Temenos. It's their Q1 2025 earnings call.
Yep.
We're going to unpack the performance, look at the strategy, and really boil down what CEO Jean-Pierre Breur and the team shared.
Okay, so first glance, Q1, the underlying business. Pretty strong, actually.
Oh, really?
Yeah, driven mostly by software licensing. Subscriptions in particular looked good.
Okay.
And that growth, it pretty much offset the hit from that, that large BNPL customer downsell on the SaaS platform.
Right, I remember they flagged that one before.
Exactly. It was already baked into their previous guidance, so not a huge shock.
So even with that going on, the recurring revenue base is looking solid?
Absolutely. You look at the AR, the annual recurring revenue and maintenance growth, both were solid.
Mm-hmm.
And that gives really good visibility on future recurring revenue, future free cash flow.
Makes sense.
Profitability also saw pretty strong growth in Q1, and they've actually reaffirmed their full year guidance for 2025.
Even with the macro picture looking a bit uncertain.
Yeah, despite that increasing uncertainty. They also gave some indicative growth rates for Q2.
Okay.
Oh, and the other big news, a share buyback, up to 250 million Swiss francs.
Wow, that's over $300 million, right?
Yep. Kicking off April 28th.
Okay, quite a bit to unpack there. Let's dive a bit deeper. What about the actual selling environment during Q1? You mentioned uncertainty.
Right. So for most of the quarter, they said things were stable, business as usual, sort of.
Mm-hmm.
But then the last 2 weeks, that's when they saw some deals get delayed. They put it down to that, macroeconomic uncertainty creeping in.
Okay, so deals delayed, not lost. That's a key distinction.
Crucial point, yeah,
Yeah.
not lost. And they were quick to point out that several have actually already been signed just in the first few weeks of April.
Okay.
They mentioned about $5 million of that Q1 slippage closed already, and they expect the rest to close in Q2.
So it sounds like more of a timing issue than demand evaporating.
That seems to be the message, yeah. Timing, not a fundamental problem.
Good to hear. Any big new names signed up? Any key wins they highlighted?
They did.
Yeah.
A couple stand out. One was a UK-based global payment provider.
Okay.
Sign them up for SaaS core banking. And the reasons were interesting. Scalability, Temenos' international experience, their localization stuff, and support for expanding into the U.S. That last one's telling.
Yeah, definitely points to their U.S. ambitions. What was the other one?
A North American digital investment platform. They picked Temenos SaaS core banking too.
Replacing someone else.
Yeah, apparently replacing a competitor they were having real struggles with during the implementation phase.
Ah.
So Temenos came in offering, faster implementation, better scalability, shows they can be the reliable option maybe.
Right, stepping in when others stumble. But signing is one thing, getting customers live is another. How are they doing there?
Pretty well, it seems. 70 go lives in Q1.
70. How does that compare?
It's up from 61 the year before. So progress.
Okay.
Highlights included a big tier 1 U.S. bank going live in Europe for core banking wealth.
Interesting.
And a European tier 1 bank expanding their use of Temenos for international corporate stuff in Asia, building on what they already use elsewhere.
So landing and expanding and handling complex stuff for big players.
Exactly. Shows the platform's capability and stickiness.
You mentioned the U.S. expansion support earlier. How big a focus is the U.S. market overall for them?
Oh, it's huge. Definitely a major strategic priority. They put numbers on it. Market size is about 35% of their total market.
Wow.
Something like $8 billion in annual spend over there. And a lot of U.S. regional banks apparently really need to modernize their tech.
Big opportunity then.
Right. So they boosted their U.S. sales capacity late last year, expecting that to drive more pipeline.
Makes sense.
They're also investing specifically in the customer lifecycle in the U.S. and U.S.-specific products.
And didn't they open a facility there recently?
They did, a U.S. innovation hub down in Orlando, Florida.
Orlando.
Okay. Yeah, the idea is to drive product development, both global and U.S. focused, and work more closely with U.S. clients and partners. It's a real signal of commitment.
So heavy focus on the U.S. What about the rest of the world, the international side?
Still very important. That market's even bigger, maybe $15 billion or so. And they see strong demand there for best-of-breed software, as they call it.
And they have a presence already.
Oh, yeah. Strong footprint in places like the Middle East, Africa, emerging Europe, parts of Asia Pac.
Okay.
And they're not standing still. They're putting money into attractive markets like Western Europe, specifically UK and Ireland, hiring new sales folks there.
Right.
And down in Australia, they just signed a partnership with Cognizant,
Cognizant. Okay. For what?
to expand their core banking reach and their go-to-market efforts there. So that's a broad strategy, really adapting to different regions.
It definitely sounds like a multifaceted plan. Are they making progress on the sort of internal strategic stuff too?
Yeah, they touched on that. Progress on simplifying their product and tech organization, trying to be more agile, more aligned with priorities. R&D spend is focused on ROI, expanding in those key markets, US, Western Europe, but keeping their base in India.
And simplifying the product line. I remember the multi-fund sale.
Exactly. That simplification continues, and they expect the multi-fund sale to close this quarter, actually.
Okay.
Plus, ongoing talent acquisition in key spots, investing in services and partnerships for customer value. Oh, and some key senior hires.
Oh.
Yeah, a new head of architecture and database based in the US, and a new CIO. So building out the leadership team too.
Okay, lots of moving parts. Let's switch gears to the numbers themselves. What were the key financial takeaways? Constant currency, pro forma, I assume.
Yeah, that's how they presented it. So ARR up 9%,
Right.
driven by strong subscription and maintenance signings.
Okay, solid ARR growth.
Subscription and SaaS revenue itself was actually down 2%.
Because of those delayed deals.
That's the main reason, yeah. But offset by strong growth in the, let's call it, traditional software licensing subscriptions.
Got it. And maintenance.
Strong, up 11%.
Okay, profitability.
EBIT grew 8%. That gave them an EBIT margin of 31.5%. Pretty healthy.
And cash flow.
Free cash flow also up, 12% higher at 49 million.
Nice. What about things like DSOs? Collections.
DSOs were at 147 days. They expect that might tick up slightly in 2025 before improving again in 2026.
Okay, something to watch maybe. And debt.
Net debt at 562 million. Leverage is 1.3 times. That's right in their target range of 1 to 1.5. So financially, looks pretty solid overall.
And that share buyback you mentioned earlier, can we get a few more details on that? It's quite sizable.
It is up to 250 million Swiss francs, starting April 28th, running through the end of 2025.
Okay.
They plan to buy the shares on a secondary line and then cancel them at the 2026 AGM.
Right. And the impact on earnings.
They expect it to be somewhat accretive to EPS in 2025 and then more so in 2026, just because there'll be fewer shares outstanding.
Standard effect signals confidence, usually.
Yeah, confidence of future cash flow, return value to shareholders, that kind of thing. Likely helped by the expected cash from the multi-funds sale too.
Makes sense. Okay, looking ahead then, you said they reaffirmed the full year, but gave some Q2 hints.
That's right. Full year guidance reconfirmed, but they did acknowledge the macro uncertainty, put that caveat in there.
Sure.
For Q2 specifically, non-IFRS, constant currency, excluding multi-funds, they're indicating subscription and SaaS revenue growth between 6% and 10%.
6 to 10%. What's that in dollar terms, roughly?
Between 106 and 110 million. They pointed out that $4 million range is actually less than 1% of their full year guidance.
Okay, so not a massive range in the grand scheme.
Right. And they sounded pretty confident about signing a couple of big deals in Q2, which would push them towards that 10% end.
Right, and ARR growth for Q2.
Expected to be at least 10%. So it looks like they expect to rebound after the Q1 timing issues.
Okay, and just circling back to the macro environment one last time, it clearly had some impact in Q1.
It did. They directly link those end-of-quarter deal delays to the rising uncertainty.
But they don't seem overly panicked.
No. Their core message was that the fundamental drivers, digital transformation, IT modernization for banks, those are still intact. They see that spending as largely non-discretionary. And they made an interesting historical point. They said major shocks, like the GFC or COVID, tend to hit them harder by lengthening sales cycles.
Right.
But normal recessions, less impact historically. And given banks are generally pretty healthy now, they think it's more like the latter scenario.
Interesting perspective. And tariffs, any impact there?
Nope. They said tariffs announced so far don't directly hit their software and services.
Okay. So if you're an investor tracking Temenos, what are the main things to pull from this call? The key takeaways?
I'd say first, reaffirming guidance, despite everything, suggests real management confidence in the business and the pipeline. That's significant.
Yeah.
Second, the big share buyback. It's a clear signal about returning capital, backed by the multi-fund sale cash and strong free cash flow.
All right, capital return.
Third, the U.S. focus is undeniable. The investment there, the innovation hub, it's clearly a major growth engine they're trying to fire up.
A key strategic bet.
Exactly. And fourth, that Q2 indicative guidance points to a near-term recovery in subscription and SaaS growth. But obviously keep an eye on deal closures and the wider economy.
Absolutely. Okay, let's pivot to our final segment. This is not financial advice. Time for an outrageous but plausible trade idea based on today's deep dive.
Right, let's get speculative. So you've got Temenos reaffirming guidance. They've got this buyback coming, which could support the price. And they sound confident about closing those key 2 deals.
Okay.
So one idea, go long Temenos stock. Pretty straightforward. B2T. Because of those macro uncertainties they keep mentioning, maybe hedge it slightly.
Hedge it how?
Consider buying a slightly out of the money put option on a broad market index, maybe MSCI World or something similar, say a few months out expiration.
Interesting combo. So long the specific company, short the broader market risk.
Sort of, yeah. It lets you capture the upside if Temenos delivers on those deals and the buyback helps, but gives you some protection if the whole market takes a dive because of macro stuff. It isolates the bet a bit more on Temenos itself.
Okay, a potential way to play their specific story while acknowledging the wider risks. Plausible, maybe a bit outrageous.
Exactly. And remember, everyone, this is strictly food for thought and exercise in possibilities, not actual financial advice. Always do your own homework. Consult a pro.
Absolutely essential reminder. So that wraps up our deep dive into the Temenos Q1 2025 earnings call. We've hit the results, the strategy, and offered some speculative thinking.
And just to reiterate, this is all for informational purposes, not advice. Your investment decisions are your own. Do the research.
We'd love to know what stood out to you, though. What were your takeaways? Did we miss anything crucial? Find us online, join the conversation.
Thanks for tuning in to TalkTickers. We'll catch you on the next deep dive soon.